Hello traders at CMC Markets. This is Trevor Neil of RRG Research BV. I'm presenting to you this morning from London for the 6th of January 2024, and this is our outlook, and I'm going to concentrate today on stocks. The first relative rotation graph I want to show you is of asset classes. So I'm using ETFs to represent the asset classes, and let's just go through the messages that we've got here. Now, in the center is the MSCI World Index. So this is asset classes versus the MSCI World. Now let's look at the outstanding ones first. Here we've got commodity index and the Dow Jones Commodity Index, and you can see by that little tiny graph down there, the long-term trend is decidedly down and still pointing down, and that's what we see here. A asset class, commodities, which is heading in a southwesterly, which means that it's decreasing in RS ratio, relative performance, and also with out positive momentum. This is very poor. We have got the furthest on the right here is the QQQ, and this is not pointing northeasterly or anything like that. It's just holding out there at this furthest to the right point. Here we have the little graph. As you can see, this is a weekly sampling, and we're going up very strongly indeed. A little bit of an edge pullback here, but still a very strong and furthest on a relative basis versus the MSCI World. Looking at the interest rates, here we've got the corporate bonds heading in the wrong direction, in the wrong quadrant. We have got the iShares 7 to 10 year bonds also in the wrong quadrant and heading in the wrong direction, and here corporate bonds in the leading quadrant, but they've turned round and heading back towards the lagging quadrant. So that's an area not to be in. The gold trust here has been great, but it's really struggling with that sort of very failed attempt here to really consolidate its breakout, and now putting in a lower high in place here, and that's putting the direction of that towards the lagging quadrant. So going from the leading very quickly into the lagging quadrant. Now that leaves us with the stock indices. We've got the small cap 600 index in a good position, moving through the improving quadrant, heading towards the leading quadrant. We expect that to improve. Europe, yes, here it is, made new high, the 350, but has come off a bit here now. We see that blunted there. It's good, but it's not as good as the S&P, which is holding close to the MSCI World Index. That is normally the case because it is such a big constituent of it. And then we have got the QQQ here, and you can see this is the security which is furthest to the right and has a strong upward trend with a little tip off at the end here, but this is the best looking of the lot. So we've got US is best looking, US equities best looking, of that the tech stocks the best. The worst looking are the interest rate ETFs, and then worst of all commodities. So stocks, in particular tech stocks, are the best to be in. And now a look at the RRG chart with a weekly sampling versus it's the major stock indices versus the MSCI World. And this is a joy really of relative rotation graphs, as you see in a glance what's actually going on here. We've got most everything pointing in a southwesterly direction. Westerly losing relative strength versus the stock market average, and southerly without any positive momentum. Worst of all, it still remains the Hang Seng. Look at that there. It's in a strong downtrend, unlike other stock markets which are in uptrends. We have got the European indices turning around here. The DAX, the stocks, the CAC here has moved into the lagging quadrant. Here's the Australian index, here's the poor old FTSE here, and you can see that, whereas the DAX, which made new highs recently, no chance of that in the FTSE. Nikkei also weak, and the Nifty too has turned. It's overall it's good. Here it is good, but it's just weakened off a bit. Not to say that it won't flip around again. That often happens, as has happened in the Nasdaq, and the Nasdaq is looking good, but just a little bit of loss of edge there. But furthest to the right, heading northeast, the direction we want to go, with increasing relative outperformance, relative ratio, and also with positive momentum, is the FANG, and there it is there. Got a little bit of a knock on the edge there, which hasn't shown up because most things have, and on a relative basis this is at least of it. So the message is strong. US stocks in particular, technology in particular, the Super 7 or the FANG Plus group. Anyway, the tech stocks. Now, we've been talking about the stock indices versus the MSCI World. So, as you can understand, if the MSCI World goes down and an index goes down less, then it will show as outperformance, because it is outperforming the falling market by falling less. So let's have a look at what's the background here. What are we comparing it to? So this is a daily chart, but let me expand this out to show you the context for this. So it is not yet back to its high, which was at 3,200, and that was in December 2021. We had a big sell-off, which you're all aware of, in 22, and then in 23 we've had a big bull market, and we made a major important break when we broke through the 3,100 level, really, and then we surged from that, and then we've had a bit of a sell-off here. So how different markets have reacted to that is very interesting. Now, zooming back in again, we can see that we've broken. We're not at new highs or anything like that. We've had a little bit of a dip down, so we're comparing things to an average which is dipping. The MACD has crossed down at a high level there, so that's quite a warning. And then the RSI has plummeted in here. Now, here's a big view of the Nasdaq. It's a daily chart, but I brought in data right back to 2020. So here's the break of the 2021 high, 16,800 roughly high, going to nearly 17,000, and then pulling back now very sharply and into an area where there is not any support until we get back down to 16,000 in here. So there's a danger of this extending. The RSI clearly very weak indeed and still pointing down, and the MACD has crossed down and it is negative too. However, we are in a strong uptrend. We saw that in the RRG, and of the bunch, this is the best of them, and this is the little dip that we saw on the graph when we were looking at it. Seemed like a little dip there, but a much bigger dip when you feel it in real life. And the danger is that we're heading into an area where there is so little support. So just to restate that, but after zooming in, we are selling off after having made new highs against previous important high, and then now selling off and looking rather weak and looking vulnerable, because the move up here was so swift, to coming back quite quickly, and that seems to be happening now towards support at 16,000. The MACD confirms this. The gap is widening, it's bearish, and the RSI here is going down to a little bit of flattening out here on it, but it's looking very bearish. Now, looking at this FANG Plus set of stocks, you can see here that what's the direction mostly of the arrows here. They are southwesterly, weakening on a relative basis, and also southerly with poor momentum. We've got an exception, which is Microsoft here. It's in the improving quadrant, but the direction is good, but it's not close to here. This could flip around very easily. The furthest to the right is AMD, but it too has come down very hard. And worst looking of all, from an RRG point of view, is Apple, which has come down very hard. There's none of them looking particularly good. They're just degrees of bad. The worst is Apple, and the best is Microsoft in terms of prospects. So I'm going to just have a look at Microsoft. From that graph there, it's not come down sharply, the other ones. So let's have a look at Microsoft. So Microsoft has come down, but what's holding it up is support from July 2023 at around the current levels. So we've come down, bounce, hold lower highs, so the pressure's still on here, but it is holding up. The 50 and the 200-day moving average, I know it's a very long-term perspective, but the gap is still widening here, and so that's still a positive message. The MACD has crossed over here, which was brilliant, having crossed up down here, so caught the top brilliantly for us, and the RSI is sinking down hard. Not precipitously down, but it's low, and you might say it's extended on the downside without too much violent power. This stock wants to hold, I think, but the whole complex is weak. If it were to break through the highs of 378, then I think we'd be on our way back through that 85.5 high. If we break 78, sorry if I made a mistake there, 78. If we break through the 78 level, then I think we're going to break that high. And I think if the pressure goes off the market, this will be the one that will spring up and lead the pack up. Another one that I think has strong potential to make a sizable move to the upside if the pressure comes off the group, because we've got these very incredible series of highs at the big round number of 500. 1, 2, 3, 4, 5, 6 tops in place at 500, at the big massive round number. That takes in enormous importance. We have got higher lows going on, so it's pushing towards it. There's an ascending triangle. The breakout could be very violent on the upside, but of course we're 20 below that at the moment, so it's above us. But I think that as long as we hold the 450 level, then this is ultimately going to break to the upside, and probably violently. So this is one to watch for when the pressure is off. Moving to Meta. Now Meta has got a pattern of higher highs and higher lows. It's had a sell-off in line with everything else, but relatively mild sell-off for it, and it has come back to support at 342, and possibly is holding that support. The high is 362, and that's tantalizingly close, and would, if we were to hold here, would continue this pattern of higher lows. The moving averages, the 50 and the 200, the gap is widening there. That's a long term. We are bullish, as we know that. The MACD has crossed down, and because we are going down, and did a good job really of catching the top. The RSI has come down. Now this is what interests me, is we've come down below 50 and turned up. In a bull market, when markets retrace to a support point, which is the previous high, which is a strong support point, and then the RSI comes down below 50 and turns up, that's often a signal that the reaction is complete. And so I think with further sign of strength in here, this could be an early leader if there is a move back generally in the complex. And so if we go through the 350 level, there's an obvious protection level below the low here at 340, below the low there, and the next swing should take us to a new high. So this is close to a setup, I would say, if you think that this is all going to resolve itself to the upside and the world is not over. Now, where the world does look to be over is Apple. It struggled to try and get up to 200, had a second attempt at it, failed here, and then from that point, and particularly when we broke the kind of support here at 190 area, it has tumbled down, and it's gaining momentum. Gap is widening on the MACD, which indicates it will go further down, and the RSI is plunging, still pointing low. I know it's an extreme reading, but it's still pointing low. We are coming towards an area of support, but it's approaching that area of support with increasing momentum. So as in the shorter term, this is likely to get worse before it gets better, and obviously it must hold this 166 level here, but it's looking dire, and this is one of the leaders of the weakness in the Fang Plus group, or the Magnificent Seven group. We've got some potential setups for if the pressure is off, and some of them looking like they are ready to bounce up and make new highs again. They just want to do that, whereas we can see Apple is not the case. But there are a couple of outstandingly bearish and underperforming indices, notably the Hang Seng. That's a long multi-year downtrend, which is still intact and has been the best sort of play for pairing off in against the bullish indices. And you've also got the FTSE, which is just stuck and so forth. So it's a kind of just stays where it is, and it's a drag on the MSCI world. I thank you all very much indeed for listening. I hope you find this useful and beneficial to you in your trading. This is Trevor Neil of RRG Research, wishing you the best, and may the trend be with you. Goodbye.